At what age did you first become a millionaire?
It was never really the goal just to become a millionaire. My mindset was never on just making $1 million. I just wanted to live well and live the life I wanted to live. But really, we crossed the millionaire mark late 30s.
There's so many different ways to build wealth, and everyone has a different approach to investing. What would you say has been your investing strategy?
So I started young. That's always important. I mean, you talk to anybody, time in the market is your most important factor. I've also chosen to just be really aggressive with my investments. Like I'm young enough where I have time to make up lost funds. So if I invest, more, in growth funds and riskier assets and it goes down, it's not that big of a deal because, when you're looking at 30, 40 years of investment time, and I can invest in a fund that's averaging, 15% versus one that's averaging, 10 or 6 or something really low, like you're going to build wealth a lot quicker that way. That being said, you could lose all your money too. So it's satisfying when you look at it and it's like, you start getting to the point where you can compare it to your salary that you're bringing in of like, hey, like this was a good year in the market. I made more in the market than I made at my job.
Yeah, that's an amazing feeling. Looking back on your own journey up to this point, what would you say has been the number one factor that's helped you build your wealth? Today, I am joined by millionaire Shawn Radovich. Shawn, thanks so much for coming today.
Yeah. Thanks for having me.
Really looking forward to learning more about your financial story. And where I'd like to begin is by asking you, in what industry did you decide to pursue a career, and what has that looked like throughout your career?
So I'm an engineer by trade. I've got a bachelor's and master's in engineering. I mean, I've worked about the last 14 years. I've been in the national lab space, so a couple different national labs.
Wow, is that like Sandia National Labs?
Sandia, I started at Sandia, worked there for 12 years, and we recently, about 2 years ago, moved to Tennessee, where I'm at Oak Ridge National Lab now.
That's very impressive. I got my undergraduate degree in geology, so I know the prestige that goes along with those positions at the national labs. Congratulations.
Thanks.
Awesome. So, for most of your career, you've been an engineer. And from what you had shared with me before we started recording, you also had a short stint in Asia. Is that right?
Yeah. So before I started working, I did a year where I lived over in East Asia, took some language classes and just did that before I got into the working world, mainly because you don't get that opportunity once you start working. And so once I graduated, I basically took the year off, was able to travel, experience a different culture, do that whole thing, and then be able to get into the working world and not have to take a break or anything in between.
That's amazing. I wish my wife and I had done more of that before we started having kids. And now that we've got little ones, there's just so much more that goes into it in terms of logistics trying to get out of the country.
It's true, but you can still do it. I mean, my son's been, to 3 different countries so far, and he's 6. So he started traveling at 5 months. So it's certainly doable. It just, like you said, it changes the trip and there's a little bit more logistics involved, but certainly don't let kids
Wow.
stop you from traveling.
Yeah, he got started young. He's already even more well traveled than a lot of adults are. That's pretty cool. So, curious to know about your family situation here. It sounds like you're married and you have at least one son. Is that right?
Yep. I'm married and just have one 6-year-old son.
Okay, awesome. And at what age did you first become a millionaire?
So it's hard to answer that question exactly because it was never really the goal just to become a millionaire. My mindset was never on just making $1 million. I just wanted to live well and live the life I wanted to live, which is kind of ironic because I actually probably track some of my accounts more than a lot of people, but I just never kind of put that number where I'm looking for a threshold. But really, we crossed the millionaire mark late 30s.
How would you say that your career in engineering has influenced your approach to your finances?
Probably a little bit strange here. I also have a degree in finance.
Wow.
In school, when I was studying, I kind of decided I don't know if I want to do engineering for my whole career, and but I'm too good at math to give it up. So instead of changing career or changing degrees, I just picked up another one. It's just ended up with a finance degree as well. So finance has always been something I've been interested in. I read a lot of information. I look at a lot of thing. I look at investing. My grandma gave me a magazine when I was, I don't know, probably 12, learning about mutual funds and everything there. So I started that journey just kind of understanding things. And then I've been active, just kind of helping people understand their budgets or some of the financial classes through church, and kind of offered to help people there. So I've been pretty involved in kind of the finance world, I mean, really my whole life. Decided to do engineering as a career for the time being, at least.
That's pretty cool. Maybe one day, once you retire from engineering, there'll be a second career there on the tail end as well.
I always like talk about that of being able to go and do financial services and especially with people who may not be able to afford it,
Mhm.
just kind of more on a volunteer or low cost basis. Because I think that's a significant barrier to a lot of people hiring a financial planner because people who are in the financial planning industry know that the costs are often well worth it, but it's sometimes it's hard to look at that price tag and say it's worth it. And so you kind of getting people in that door and just helping people has kind of always been a passion that I've had.
Mine too. That's a big reason why I'm doing this podcast is because not everyone can hire me just based on their life situation. It's a way to share a lot of valuable information for free that people that might not have had parents that set a good example for them or grown up with that financial education in their home have an opportunity to learn from good examples like yourself of best practices that they can follow. For anyone in that space that's, looking to educate themselves financially, but maybe not ready to reach out to a financial professional, would you have any recommendations on books or podcasts or other resources that they could go to that have helped you?
One of them that I read, and it's funny, it was actually when I was in East Asia, I got a copy of this book. It was called Live in Large. And I think J. Raymond Albrechtson, probably not a super common book that a lot of financial people hear, but it had a very simple message of it was, um, give a little, save a little, live happily on the rest. And it's just a really good message that I was like, I really resonate with that, because it really is important. You get the first things first, and then it's actually okay to spend money. And so that's a good one that's very easy to get into. I'm not really a big reader, but I read that one in one sitting, while I was sitting over there in East Asia. So that was a really good book. Any more, like, there's tons of good resources. I mean, you go connect with a couple financial planners on LinkedIn and you'll see examples all the time. Pretty soon your whole feed is filled with that. Like, there's a lot of stuff on YouTube, a lot of stuff all over. I mean, it really, if you do that, then the algorithms will find you and start telling you all kinds of things. So set aside some time and do it.
Yeah, agreed. One of my personal favorites is The Simple Path to Wealth by J.L. Collins. I read that not too long ago and think it has really good principles for anyone that's getting started that wants an easy formula that they can follow and that doesn't want to get maybe super into the weeds of picking investments. It outlines a pretty straightforward strategy that anyone can do. You don't have to be a financial professional or an investing expert to be able to get started building wealth.
Well, you just have to look at the best people, or the people who do the best in the market, are dead people. That they've done
Yeah.
studies on that. So really, just stick with what you have, and you'll do okay.
Yeah, I've heard that too, that people that passed away and people that forgot their password have the best investment returns.
Yeah, which tells you a lot.
Yeah, it does. There's definitely a behavioral aspect to finances that can be the hardest part to master. Looking back on your own journey up to this point, what would you say has been the number one factor that's helped you build your wealth?
Really, the biggest thing is contentment. We've never chased after a number. It's always just been live below your means, and be able to invest the difference. So, I mean, you see a lot of people, especially if you're in like the LinkedIn space or anything there, there's a lot of people who are just pushing and, have these goals to, hit a certain number, hit a million or whatever. I mean, I find really what that leads to is you're just not happy. Um, and if you can go through life with contentment, whatever scenario you are, it's a lot easier to live on less than you could, and just be content. Choose the things that you really want to invest in, the things you want to spend your money on, and then be able to move forward with that. So really, I would say like your mindset is absolutely the most important thing. And the more you can be content with things, like that's a huge factor. And for one example, when I got my first job, a lot of people who go out and buy a car or get an expensive place to live. I actually spent less money on my apartment that I had with my first job than I had in my apartment when I was going to school. Got a roommate, was able to save more that way, and and I don't regret any of it. Right, it was some great years. I had a great roommate, and was just able to connect on levels that you don't when you're just living by yourself. So that's huge. Yeah, I mean, so really, like that's the biggest one is mindset. Choosing what you want to spend your money on, and not necessarily letting the world outside just define that. There's a lot of people, with social media, with all of that, you can look at everyone's highlight reel and be like, oh, I want that, and trying to the keep up with the Joneses mentality is a really big thing these days. But in reality, right, if you're looking at other people and what they spent, like whatever they have just shows how much money they've spent, not how much money they have. And so, kind of keeping that mindset of as long as I'm spending money on the things that make me happy, I don't need to do things to impress other people.
Yeah. Thank you for sharing. Such a great point. And I remember a point in my life where I had a really close friend and I found out he was making significantly more money than I was. We're the same age, similar education, same stage of life. And it threw me for a loop for a little while. I found myself comparing myself to him and asking if I had done something wrong that my income wasn't higher at that stage in my life. And one thing that really helped me to shift into more of that contentment mindset was asking myself a simple question, which is, do I have sufficient for my needs? Am I putting a roof over my head? Do I have food, shelter, clothing? Am I providing for my family? And the answer to all of those questions was yes. And I think it was a really good reset and a reminder for me that I didn't need a brand new car. I didn't need a higher income. And I already had all of the most important things in life. So I'm really glad you shared that too. Something else I wanted to explore a little bit further is, how would you say that building wealth has helped you improve your life? If you're seeking that contentment, what are ways that having the financial resources to do so makes your life better?
So I mean, I think for us, it's been able just to create more margin. I mean, I'll give an example. Like when we had our son, there's all kinds of things that happen when you have a baby and all these needs you need, and the fact that we had been intentional to save money, been intentional to live below our means, meant that like we didn't have to stress when my wife needed a new baby rocker that was the one that he had when he was in the hospital and was really comfortable with, and just to have another place to set him down. There was just a lot of things there where choosing to live below your means gives you a lot more margin. Obviously you want like an emergency fund and things for things to go wrong, but also sometimes you don't even necessarily touch your emergency fund because you have enough margin just in your day-to-day life that some of those things that come up, you just cover it just within your normal cash flow, and you just invest a little bit less that month. And so I think really like once you get to the point where again you're content with where you're at, you're doing the things that make you happy, whether it's traveling, whether it's whatever it is, everyone's got an individual thing. But if you're not spending on what makes someone else happy and you're just doing your thing, you have more money to just kind of meet those obligations. And just any little thing that comes up where you just have margin is a huge benefit of choosing to live below your means, I think.
So you've mentioned this idea of living below your means a couple times. And I've heard the saying before that if you spend a dollar less than you earn, you'll always be content. And if you spend a dollar more than you earn, you'll always be miserable. Which I think is kind of a funny saying to illustrate the point that living below your means solves a lot of the financial problems people face. Do you and your wife have any sort of guidelines you try to follow, like how much you save on a regular basis or how much you're contributing towards your investments?
So I've never really had those targets. I've been very religious about keeping a budget. And I don't necessarily, there's some people who will kind of, budget up front and then you'll do like the envelope system or something like that. I've kind of approached it more as just to track it. I have kind of some rough budgets of what I shoot for in all the different areas. And then depending on where I land with that, then I can just invest the rest. And so I've tracked basically every expense since college. I have a homegrown Excel spreadsheet that I've shared with a number of people over the years. It's got its macros and stuff that's improved over the years. Hasn't really changed much over the last few, but so I can go back all the way to college and see how much I was spending on any given category. But yeah, it's always just been just kind of a natural thing for me. I'm a natural saver, so some of the things when I set a budget, like the goal was always to see if I can do better than that, and then I can save more. So maybe I'm a little bit weird that way, but
I would say that's definitely the engineering mindset of having a home built spreadsheet with macros and 15
for
to
sure,
20 years of historical data.
yeah, exactly.
That's
It
awesome.
doesn't work for everybody, but I mean, it's been great for me, and I've got great records to see where my money's gone. And that's one of the things is that I can always like look back and see where my money's gone. And I think that helps drive your decisions. When you know where you're spending money, it's really easy to see when you start going off course. You're like, hey, I'm spending too much money eating out. Maybe I need to think about that more, or I'm spending too much money here. I've got one friend, Brad Wooten's on he's active on LinkedIn, he's a CPA, but I've heard him say, call it a an intentional spending plan. And I really like that verbiage because it's not just about like how much you're spending, but it's like you're choosing the areas that you really want to invest in. If traveling's important, instead of buying coffee every day, you put that money towards traveling. Not saying that buying coffee is a bad thing, but for me, I don't drink coffee, so it probably would be a bad thing for me if I started drinking it. But because I just don't value that, right? So, but I do value traveling, and if I have money in my budget to do that, then I'm happy, right? Like I don't need to spend in other areas.
Yeah, that's actually what I call it too, the intentional spending plan. And it's not to try and drive your spending down to as much of a bare bones budget as you can. It's putting your dollars where you value spending money. I think that's a great framework that helps protect against getting into that scarcity mindset of always just trying to cut things out of your life to the point where you're actually removing value from your life of things that you enjoy and it feels restrictive. And think having a more of an intentional spending plan really helps to prevent that.
Right.
It's
Yeah, for
cool.
sure. Yeah, just the mindset shift when it's not restricting, but it's oh, I can actually do the things I want. It's a complete game changer.
Oh, it's so liberating. And, you know, I'll share an example from my own life of how this works. Like, I remember when I was in college, I worked in door to door sales, and my last summer I did pretty well. I had a bunch of money saved up. And as a single guy, yeah, I was on the Tesla website thinking how much fun it would be to buy a Tesla at the time. And then kind of, walked myself through like, okay, I live in an apartment. Where am I going to charge this thing? Do I actually need a new car? The answer was no. And so that was something I said no to, but it allowed me to say yes to buying a house a couple years later because I had that money that was growing for me on the side that I used as a down payment. So it really just comes down to what are my priorities, and having that extra financial security gave me better options later on down the road of being able to become a homeowner and other important priorities a few years later. So it definitely paid off.
Right, for sure.
There's so many different ways to build wealth, and everyone has a different approach to investing. What would you say has been your investing strategy?
So I started young. That's always important. I mean, you talk to anybody, time in the market is your most important factor. I've also chosen to just be really aggressive with my investments. Again, part of that is mindset, right? If I'm expecting to work, into my 60s. I don't have this goal of like, oh, I need to retire at 50 or something there. If I get to the point where that's reasonable and I can step away early and be able to live the life I want to live, then I can do that. But also if like I'm young enough where I have time to make up lost funds. So if I invest, more, in growth funds and riskier assets and it goes down, it's not that big of a deal because when you're looking at 30, 40 years of investment time, And I can invest in a fund that's averaging 15% versus one that's averaging 10 or 6 or something really low. Like you're going to build wealth a lot quicker that way. That being said, you could lose all your money too. Um, so having that mindset where I'm not scared about the market going down is a big thing. I still have investments in some of the stocks or the funds that I invested in almost 20 years ago. You just being able to stay the course is really important.
Yeah, I love what you said, and this has actually been a common theme as I've been interviewing different millionaires is the importance of getting started early because you have the power of compounding on your side. You have more time for your investments to grow. And to your point, if you want to invest more aggressively early on, you also have more time for the market to recover. If you do make an investment that takes a serious dip, there's plenty of years for it to bounce back.
Right. Yeah, and like the key is just to not let it really affect you. I mean, you just look over the last couple of weeks and markets are down by a lot, crypto's going down by a lot. And I've started to kind of, train my son. Like he took some of his money that he had a lemonade stand and he decided to invest it in Bitcoin. And so whenever Bitcoin goes down, I ask him like, "Hey, Bitcoin's down. Do you want to sell it?" And he just looks at me and laughs and is like, "No, it'll go back up." And so just like really training that mindset young of like, you know what? Like there's down days in the market and we don't have to stress it is going to be a huge mindset for him growing up. And it's certainly one that I've utilized that, no one likes to see red on your account when you log in, but it's not as big of a deal if you just let it go. It'll
Is this your
recover.
6-year-old son that is
My
investing in
6-year-old
Bitcoin?
son, yeah, he owns Bitcoin.
Wow, get him started. Yeah, I'm guessing that's probably like a custodial IRA account.
Yeah. Yep, exactly.
Wow, that's pretty cool. He's definitely gonna have a leg up in life. He'll have 20 years of compounding on everyone else before they even start investing.
Right. Well, and he doesn't spend his money. Like he's happy to spend anyone else's. Like, oh, Dad, you can buy me this Lego set, but I'm just going to invest in companies and Bitcoin. So I don't know. He's a strange one.
That is a very forward-thinking 6-year-old.
Yeah, he's decided to start a business in our front yard. He called it Out Front Steakhouse. Recruited our neighbors across the street to come and be the first visitors at his steakhouse. And when they paid him at the end, they asked him like, "What are you gonna do with the money?" He's like, I'm gonna buy a house." I don't know how many 6-year-olds are thinking about buying a house, but at least one.
Wow, that's pretty cool. I had a attended an investing seminar one time back in college, and one of the presenters gave what I thought was a pretty good piece of advice. He said, "The best way to improve your investment returns is just to check it less often." And I
Mhm.
think about in our modern world where I've got my investing apps at my fingertips every day, it's so tempting just to wake up and be like, "Oh, where's the market at today?" But to your point, the more you can separate your emotions from that, the better off you're going to be.
Yeah, and I check mine every day, sometimes multiple times a day just to see where the market's at, just because 'cause I've always just enjoyed that, but I'm not making decisions based on that. This is money that I don't need right away, so I'm not worried. I'm not looking at it of like, "Oh, hey, it went down, I need to sell." But it's more just I don't know, I just enjoy it. I enjoy looking at it and seeing where the market's doing, and to me, that's fun.
Yeah, it's fun for me too. I have a similar to you, a spreadsheet I've built out where I track my net worth and I update it every month. And it's just, yeah, it's fun to see your progress. And I think it's also very rewarding when you start tracking your investments alongside, more people track a budget, but when you start tracking your investments too, you see the cumulative growth. It's almost like with a budget, you see how much you're spending every month, but when you track your net worth, you see how much you're growing every month, and that can be really exciting and really motivating.
Right? I mean, you log into a 401k and you just see like how much it's grown and compounded. And even, the first job that I had, I left almost 15 years ago and I can go and like look at, the balance there and it's grown, it's gone up significantly from what it was. And of course, the last 15 years have been pretty good in the market. So, it's hard to expect that to continue. And that's certainly helped towards, my wealth building journey is having a pretty good market run. But Yeah, just being able to see that is huge, right? Because like, you look back a couple years ago and you're like, I had half as much money. Like I was worth half as much. And now, a few years later, you're like, where did this money come from?
Yeah,
And so it's
that's
like
really
it's
cool.
satisfying when you look at it and it's like, you start getting to the point where you can compare it to your salary that you're bringing in of like, hey, like this was a good year in the market. I made more in the market than I made at my job.
Yeah, that's
So,
an amazing feeling.
yeah, yeah, for sure.
That's really cool. So, would you say that most of your wealth is in the stock market in one form or another?
So I have about a third in retirement accounts, and then about a third in brokerage and crypto, and then about a third in real estate.
Okay. Do you own any real estate besides your primary residence?
We do have my first house. When we moved, we kept that and just made it an Airbnb. So I have that house. It's a small, 3 bedroom that when I was in Albuquerque at Sandia, I bought that house basically a year after moving there, lived in it for 11 years. Very easily could have moved and upgraded to something, but it was fine. It met our needs. It was big enough for our family. And so we were able to just, again, create more margin by living in a smaller house. And then when we moved here, the interest rate was so low, it's tough to sell it. So we just kept it and turned it into an Airbnb.
Wow, that's really cool. My wife and I, we did something similar. We were living in Raleigh and we bought a house out there, lived in it for 3 years, and then recently moved to Arkansas. And same thing, instead of selling it, we decided to convert it into a rental. Ours is a long term rental rather than a short term rental, but similar idea that it's like anytime I buy an asset, not only do I want to keep that asset, but I want it to be working for me. And it's almost like a good forced savings vehicle in a way, too. We're renting right now where we live. And it's like that motivation. If I want to buy a house again, I have to save up a new down payment. I can't just go sell my old house and use that money to upgrade to a bigger house. It's like, no, that money's locked up in my rental property. So if I want to buy another house, it's probably going to help keep me more within my means rather than just upgrading every time we move.
Right. Which is the standard thing, right? People are moving every 3 to 5 years and just getting a bigger house, whether they need it or not.
Yeah. So, if there's someone listening to this episode and they feel motivated to get started, they want to start building wealth in their own life, what is your number one piece of advice that you would share with them?
I think looking at your mindset, right? Like are you trying to make money just to say you hit a number, or are you just trying to build a life that you enjoy? So, I mean, first looking at your mindset, um, but beyond that, like, I mean, it's kind of creating a radical intentionality with your money. And when my wife and I were talking, about this, like we're intentional with like everything we spend, right? Like, we go to a restaurant and we drink water because like I just don't value the amount of money that it would cost to, drink a Coke or something. And so it's like even in like little decisions like that, we're constantly thinking of like do we actually want this thing? And like, sometimes the answer is yes. I'll splurge for the steak, but a lot of times it's like, you know what? A hamburger sounds just as good and I'm going to be just as happy with that. And so it's not like depriving myself of anything. It's like I'm totally happy with that. And a lot of times it's better anyways, right? And so just being very intentional with what your mindset is, and not just on big decisions, but just kind of, thinking through everything, right? Is this something that's going towards me and the goals that I have, whether it's building wealth, whether it's, taking my family on a vacation, whether it's buying my first house, whatever it is, your spending should reflect that. Cause I mean, there's a lot of people that just have this unintentional lifestyle creep, and that's just going to prevent it, all day, right? Like, no, you're never going to build wealth if you spend everything you have.
Yeah, it's funny that in our society, the things that we do to show our wealth are actually the things that decrease our wealth. Buying expensive possessions.
Right. Well, and it's if you've read the Psychology of Money by Morgan Housel, right? Like, I mean, that was one of the things he said is it's like the things you have just show you how much you've spent. It doesn't show you how much you have. Um, and I think that's a really good perspective to keep, because I do think that having self control and being able to keep more of your wealth, um, like that's huge, right? I mean, if that's something that you value, being able to intentionally choose that is a game changer. and you're able to actually move the needle in a direction that makes you more satisfied.
Absolutely. Sean, it's been an incredible conversation today. And I always like to pull out a couple of key takeaways based on our conversation. The two that have really stood out to me today is the importance of living below your means, and then also the importance of being intentional with your money. I think you're a great example of someone who's a quote unquote everyday millionaire, working as an engineer, raising a family, but it's with that consistency and intentionality that you've been able to build something incredibly beautiful for your family and use your wealth as a tool for doing that. So, thank you so much for taking the time to share your insights with me today.
Yeah, thanks for having me on. Hopefully, it will help somebody in their journey.
Yeah, absolutely. And if there's anyone that wants to reach out to you or connect to you, where's the best place that they can find you?
I mean, I've been fairly active on LinkedIn is probably a good place. I don't have too crazy of a network yet, so I pretty much just accept anybody who friends me, so or connects with me, I guess, on LinkedIn.
Sounds good. Go check out Sean on LinkedIn. Thanks so much, man. Appreciate it.
Yep. All right. Thank you.
Thanks for watching. If you made it to the end of this video, you must have liked it. So hit subscribe, and I'll see you in the next one.